Ahoy. Now let's talk money, please. Remember, this channel is it's written London's maths and finance. So finance, it's accounting, has to do with accounting. So I see landela ka foundation on how do you approach our transactions. Now I'm gonna be showing you a pattern to approach transactions. I guess begela. Sino activity 2, adjustments and financial statements. So we're gonna be working out the transaction. Bese siyasho ukuthi izongena kwi-balance sheet, or is it going for income statement? Let's go. So you are given the information. The financial period is ending on the 31st of March 2020, which means it's began. Balekileke to write down your timeline. It's ending on the 31st of March 2020. No. So which means it's began on the 1st of April. Let me write better. Yeah, much better. 2021. That was a COVID. It was a COVID paralysis. No, 2019. 2020. 2019 lan. 2019. Yeah. 2020 ngesikhathi qala COVID ngoMarch. Asibuye. So sitshelwe la singaba nama-shares la ayi-1 million authorized ukuthi bangawakhipha. Sebakhiphe bona u-40% wawo lama-shares kuphela. Maqala nje kuvulwa nje. So siqhubeka na information la ama-balances. Remember, lama balances pre-adjustment trade balance, ama-balances before we saw or before we analyzed ama-errors, noma before we got to be notified because hey, something is missing, something is fishy, something is outstanding, and then we went straight to it on making sure it is sorted. So nakia nayagi transaction yokuqala, transaction A, it's saying a credit note. Awudingi lapho mayasho njalo a credit note. Mqondo wakho you should be telling you something. In your mind you should be having something now. With the credit note, remember, credit note is always going to affect 4 accounts, because remember, before we get to credit note, we started by invoice. So invoice was issued to a particular debtor that bought on credit from us as a business. Remember, in accounting, take yourself as a business owner, right? Norma, take yourself as an auditor for that business, or a bookkeeper, an accountant. Just have that mindset. So in our business credit note, invoice first, and then now credit note, because credit note is a document that is issued whenever an unsatisfied debtor is returning the trading stock that was bought on credit. Now I'm good. So, which means now we are reversing everything that we did while recording the invoice. 4 accounts were affected also. Now also 4 accounts are going to be affected. All right, so for credit note, 4 accounts will be affected. That was for cosmetic returned 17,600. Remember this amount, if they don't say at cost, just know this amount is a selling price. This amount is a selling price. Was entered in the DAJ for March 2020. 60% markup on cost applied to these goods. Oh man. I guess I'm begging now. Let's write down how many accounts are going to be affected. 4. I've already told you that. And then which are those accounts? Sales, because we was selling. And then whenever sales is affected, cost of sales doesn't get left behind. Cost of sales. And then sales will go alongside debtors control because we sold on credit. Now the debtor is returning, and then whenever we talk about debtors control is there. Debtors control is the major debtors control. And then another one is, what are we selling? We are selling trading stock. You felt the pattern, eh? We bump pattern. I'm banging pattern the way. And then debited and credited. The time we was selling on credit, sales was credited because sales grow on credit side. Okay, and then cost of sales was debited because cost of sales, their expenses, they grow on the debit side. Debtors control was debited because it's part of assets. They grow on the debit side. Trading stock was credited because it was sold, going out of the business, which means now everything that was done for invoice, we are going to reverse it for debit note. So sales now is going to be what? It's going to be debited. So DR, and then debtors control is going to be credited. Trading stock is going to be debited. Cost of sales is going to be credited. Now let's separate in terms of amounts. Sales and debtors, they're going to go with selling price. Selling price. They're going to go with selling price. Please make sure of that. Why are they going with selling price? Because we are selling sales. And then whenever you are selling on credits, you are selling, making use of a selling price. That is why debtors controlled. That person you sold to on credit is going to be owing you a selling price. And then cost price, cost of selling. Cost of selling has to do with how much did you spend in order to bring in the trading stock in your business. Okay, so cost of sales and trading stock. Trading stock is costing the cost price. So they're going to be affected by cost P. Let's go with that now, and then 17,600 multiplied by, we are looking for cost, right? We are already given selling price, it's 100 over 160. Remember the formula to calculate selling price or cost price or sales or cost of sales. Make sure you know about that formula. If you don't know, let me know. I will share it to you at some point. Okay, what's the answer? Let's bring up the calculator. This one needs a calculator for sure. Needs a calculator. 17,600 multiplied by what? 100 over 160. It's 11,000. 11k. 11,000 is the cost price. Now let's go on. Where are we going to record? We are going to record both on income statement and statement of financial position of which it's balance sheet. Let's start with the first account. What's the first account for Ilokuzan? For statement of comprehensive income, sales, right? Sales. Under what? Other income. So sales, how much is that? 17,600. And another one, which one is that one? That is going to affect in statement of comprehensive income, it's cost of sales. Cost of sales by how much? 11,000. 11,000 is gonna add in the cost of sales, and then remember, cost of sales is in brackets. Your income statement. Make sure you know the formats of income statement. Just please memorize it. And then after that, we go for statement of comprehensive income. Under current assets, we're going to be having debtors control and trading stock because they're under current asset, these two. So let's start with debtors control, and then trading stock. How much? Debtors control, same as sales. And then you're going to be adding, and then you're going to be deducting. So let me just subtract and add. You're going to be subtracting this one in the income statement, and then this trading stock you're going to be adding. So it's add, you're subtracting this one, and then you're going to be adding trading stock worth 11,000 in cost.